Hey everyone, this is Dan with Theta Trend. Today is Tuesday, March 29th, 2016. It's about 2:30 p.m. or so. The market's closed a half hour ago. We're taking a look at a daily chart of the S&P 500 right now, the SPX, and the market was up today. We had Janet said something. I'm not even sure exactly what she said. I didn't have a chance to watch it yet, but she said something accommodative essentially, and the market's like that because markets like free money. And of course, the S&P ended the day up here 17 points, 0.88%. And the size of this move kind of pales in comparison to what we saw in the Russell 2000. We're not going to talk about the rut too much today, but just the size of the move in the rut was significantly greater than the move in the S&P. This market was up 28 points or 2.67%. So it's a nice thing that we have the CIB and SPX right now as opposed to rut. I will say that. The blue line here represents sort of in the neighborhood of the upper expiration break-even point of that position. And we'll talk about the position as it relates to the market here in just a second. But this pattern that we've seen of higher highs and higher lows on the daily time frame continues. We talked about when we dropped down to the 65-minute time frame that the market had a little bit of a pullback here. Came inside of the 5-day simple moving average, the 10-day, but it really didn't. It didn't violate any key levels on the downside. It didn't find a lot of sellers or anything like that. And so as long as the market kind of holds these levels, we just kind of continue to expect it to turn sideways or even potentially slightly higher. The fact that it's made this enormous run doesn't mean that it can't continue higher. It means it's unlikely to, but at the same time, there's nothing to say we can't see it trade up here to this 2080 level or so, which would be this prior high from back in December. Maybe it gets up there, touches this, and then finds a little bit of resistance or even pushes through. Nobody really knows, and we're not trying to predict it. We're just trying to react to the movements in the market and anticipate them as they might play out. But for the time being, it makes sense to just kind of continue to expect sideways to slightly higher prices. And if that changes, we'll know that that's going to change because we're going to start to see the market violating some of these key levels on the downside. Maybe it would come down here and violate on shorter term time frame this 2032 level that might bring it down into the neighborhood of the 2020s or so down over here. And then if it starts breaking through those and finding lower and lower prices, then we might be able to expect a little bit deeper pullback or something. But for the time being, we just see a continuation of this pattern of higher highs and higher lows. The April 5 CIB, we'll go ahead and take a look at it here as it sits right now. I did get a reverse Harvey adjustment off earlier in the day, and I sold that condor that we were talking about. And so you can see here I've rolled the 2080 down to 2075, and on the downside I've rolled the 1930 back up to the 1935. So the spreadsheet is up to date if you want to look through that to see the specific prices and everything like that. And all of the adjustments up to this point, including the commissions on the closed trades, are represented with this 1900 put that's being bought for $14.25 and then sold out for $0. So this includes all of the adjustments up to this point in the position. And the way that the market closed here today, so the market closed right here at 2055, and it's actually sitting a little bit outside of the body of the butterfly. And normally at this point I'd be adjusting it because we did the reverse Harvey earlier in the day today. It stretched out this T+0 line and it made the position a little bit safer. And one of the reasons that I did that is I wanted to see here if the market would get up and above this level, sort of in the neighborhood of 2057. And I haven't made an adjustment to the position, mostly because the market hasn't gotten up and above that level. The trade-off that we're going to make here is if we make an adjustment, we are late in the trade. If we make an adjustment, we're going to give up a lot of the potential room on the downside. So if this is a fake move higher and the market, the market failed to make a new high here today, it came up just short of this level and it kind of stopped there. If it turns around and it heads lower from here, and I'm not saying that it will, but if it does have the potential to do that, certainly. If it does something like that, we're going to be in a better position if we don't adjust it. And so that was one of my reasons to just kind of protect the trade for the time being with the reverse Harvey, and then just kind of drag my feet on it and see, and certainly if the market was to gap up here higher tomorrow morning, we'd be in a little bit of trouble. We have an open profit right now, but we'd give that away. But we'll just wait and see what happens. Based on the size of the move that we're coming off of here, I'm more inclined to kind of take my time adjusting the trade on the upside. And we're also getting relatively close to expiration here. We're at 31 days in this trade. So just kind of letting it play out a little bit more than I might at a different point in the trade or in a different market environment. if we do find ourselves in a position tomorrow, say the market does get up and above that 2057-ish level, and we get into the neighborhood of that 2060, the first thing we're going to be probably doing here is taking off this lower butterfly, and that's down around, the lower leg now is 1935. Let's actually go up here. So it's at 1935, 1990, and then 2050. And so you can analyze this order, and if we were to sell out that butterfly, we'd be left in a position that looks like this. Okay, and we have two choices at this point. The first choice we could take is to add another butterfly, and so I've just analyzed here the 1970, 2030, 2090 butterfly, and that'd be something like this. And so we'd move into a position like that, and we could even move this up. Let's say we move this up another 10 points. We'll go with the 1980, 2040. 2100 put butterfly. And so if we were to do that, we are keeping both of our SPY calls. We're not selling either of them out. But if we were to add this on for 1630, we'd end up in a position that looks something like this. And in that scenario, we'd have room for the market to run kind of up into that 2080 level before we'd be considering rolling higher yet again. And we'd still have a good amount of room here to move on the downside down into the neighborhood of about 1990 or so. Another adjustment that we could make would be to close out just that lower butterfly. So what I've done here is I've just closed out the 1935, 1990, 2050, and then to sell out this one call. And so what we're doing is we're taking the position from a 2 butterfly position back to a 1 butterfly position, but we're keeping the upper butterfly and getting rid of the lower fly. So if we were to do something like that, we'd be in a position that looks sort of like this, and then the T+0 line actually stretches all the way out to up in the neighborhood of 2090 or so. And this is selling out the 202.50 SPY call. And that's sort of the more bearish adjustment because we're going to be a little bit shorter delta in this position. If we were to sell out instead the 205, go ahead here and move this up to the 205, you can see that we keep more of the long deltas because we're hanging on to that 202.50 call and getting rid of the 205. And then we have essentially a risk-free trade on the upside as long as we continue to move the position higher. On the downside, we don't have quite as far to run. We're going to get into trouble kind of in the neighborhood of that 2000 to 1990-ish area, something like that. We'd have to roll the position back. So I'm not sure that would be the adjustment that we'll take, but we'll just wait and see what the market does tomorrow and get a sense for where it is and how it's trading. If it does continue higher, we're going to be forced to make some sort of an adjustment here just because we're a little bit outside of the body of the butterfly, and we're not going to be in a good situation here if the market continues to raise up higher. If the market pulls back in the morning and this was just a fake push kind of up into this level and then it pulls back, then we might be in a position that's nicer. So that would be good. The other thing we should look at, we'll go ahead and take a look at the broken wing butterfly position, the June 1 trade. We talked about that a little bit yesterday. And so the June 1 trade, if we come back to the daily chart, the upper long is centered here, or the upper expiration break even is here around that 2040 level, and then the downside is down around that 1950. And so you can see here the market is sitting here at 2055. We're outside the body of the butterfly. It's not a big deal. The delta on the trade's negative 128. There's negative 0.01 gamma, about 350 in theta, and the open profit is about 1928, negative 26 vega. And that just made me realize that we didn't actually look at the Greeks for the April 5 CIB. But at any rate, this position is really relatively safe, and it's going to take much more of a move, maybe even to the 2080, 2090-ish area before we start thinking about doing anything to it. And for the time being, we're just kind of going to let it sit here. I mean, the market can move all the way down to 1950, and it's still going to be sitting around break even or scratch at that point. So it has some pretty good room to run. Let's go ahead and jump back over, and I'll give you the Greeks for the April 5 CIB as well. So the trade as it sits here at the close is getting a little bit short delta. It's negative 9.44 delta. The gamma is 0.06, theta is 15.51, vega is negative 26, and the open profit's about $113 or so at the close. If we do get that gap up 1% in the morning, then we would have a little bit of an open loss, negative $60. If the market was to sell off and gap lower 3%, we'd have an open profit in the neighborhood of $535. So certainly if the market pulls back here, that would be better for this position, but we can't choose those things. We can just react. At any rate, that's all I have for tonight. I hope it helps. If you have any questions, feel free to shoot me an email, info@thetatrend.com, and thanks for watching.